Hello and welcome to today's Delta Credit Tip. So you're thinking about debt consolidation. Is that the right answer for you? How does it work? What does it cost? What are the pitfalls? What are the benefits? Stay tuned. We'll fill you in on today's Delta Credit Tip. Hello and welcome back to today's Delta Credit Tip. So a lot of times in the course of credit repair, the debt load is just a lot. We get a lot of customers that come to us and they say, look, I'm swimming in debt. I don't know what to do. The payments are choking me out. I'm living in a house of cards, literally. What do? I want to consolidate my debt and get rid of it. And there's a lot of different techniques on how you can consolidate debt. So today, what we're going to do is we're going to go over some of those examples of how you can consolidate debt and whether or not it's a good idea for you. Okay? So the issue about consolidating debt is that it's a lot of money, right? And there's a variety of different ways that you can encapsulate that debt and minimize the payment, but it means somebody else is going to take on some risk, or you're going to have to take on more risk. And what do I mean by that? Well, let's take scenario one. Scenario one is going to a debt consolidation company. Okay? I am not a huge fan of debt consolidation companies, right? To answer the quick question as to whether or not they actually work, well, the answer is yes. But the problem is that there is a residual issues that you will create for yourself if you go with your typical debt consolidation company. So the way those companies typically work is the first thing they're going to tell you is on your active debts, the debts that you currently have that you're paying on, stop paying them, right? The reason why you have to stop paying them is that most creditors, Capital One, Chase, Bank of America, they're not going to negotiate that debt for you if you are current. It is very, very difficult to damn near impossible to get a creditor to work with you on a debt that you're active with. So the first thing you're going to do is they're going to say, okay, stop paying to the point where you default. Once you default, that act of charge off, that act that the bank takes, the lender takes to actually charge off the debt, what that does is it makes the entire amount immediately due. And that gives the debt the debt consolidation company that you have the opportunity to now negotiate that debt down. But that still costs you money. So for the first 3, 4, 5, 6, 9 months, you're just paying money into a fund. You're paying them instead of paying your debts. And what they're doing is they're accumulating cash that they will eventually use to settle with, but first, they get their fee. So let's say you've got $20,000 worth of debt, you start paying them some money, you're paying them $300 a month, 6 months in, they've got their fee. 3 months in, they've got their fee. However long it takes to accumulate whatever it is that they're charging you. And then they start negotiating your debts because they've all defaulted and now they're negotiable. Well, the bad side to that is that you've been late on all your creditors, right? And they've increased the amount that you owe based on late fees and collection fees, if it's applicable in the agreement that you signed with the original creditor. There's all these other things that are going to happen to you as a result of not paying them, and you still run the risk of you being sued. So for me, as a credit repair specialist or as a financial advisor, I really don't like the idea that I'm destroying credit to get out of debt. My philosophy is if you're going to go through that whole process of destroying your credit, why pay it off? Just file bankruptcy if it's that much debt. Right? You're going to do the same amount of damage, but you're going to spend significantly a less amount of money and possibly a lot less time getting it done. So debt consolidation through a debt consolidation company along those lines really isn't consolidating the debt. They're not giving you a loan and consolidating the debt. That's option 2. That's going to your bank and saying, hey, I need a loan for $20,000. And as a condition of that loan, the bank will say, okay, I'm going to give you the $20,000, but you have to let us pay everybody off and close those accounts. That way you don't run the risk of now owing them $20,000 and now ringing up another $20,000 worth of debt. This way is a lot more palatable to me, but unfortunately, if you have maxed out credit cards and a lot of debt, well, your score is going to suffer and you probably won't qualify for an unsecured loan to pay off all your debts. Banks do not do common sense lending. If you've been paying your debts on time up to this point, right, and you consolidate your debt with them, they don't understand that now that my payment is lower because I've consolidated it, that I should still be able to make those payments. They're not going to do common sense lending like that. They're going to be basing it on a score. So you may find that while that's a better option, you will not qualify for an unsecured consolidating loan from your bank. You may have to go to option 3, which is consolidating the debt in a collateralized loan. That means using a vehicle, using a home, using a CD or in a retirement account or an investment account as collateral, and then they will give you a certain amount of money to pay off your debts as a percentage of the collateral. So you have a $50,000 IRA or whatever, they'll give you $30,000 to pay off your debts. Right? That way you're less of a risk factor for them because they have the collateral that they can liquidate to pay themselves back if you don't. Okay? So that's your option 1, option 2, and option 3 wrapped up in a debt consolidation method. Okay? The last thing is not debt consolidation at all, but just doing the organic thing, which is having a budget and simply snowballing the way you make your payments to pay off the debts faster. Okay? So I hope this information helps. If so, please give it a thumbs up. Right? Also, subscribe below. Every Thursday at noon, we try to bring you more information that will help you make this traverse through this credit repair process. But more importantly, what we need you to do is share. Share this information because this is how we educate each other. This is how we become informed. But most importantly, this is how we make a choice, make a change. Delta.